terms of like, how much are you risking on this one trade? As long as you don't size up like an idiot, right? If you just size appropriately, wait for the setup, and this could, completely not work. It could fall flat on its face, go right back down. But at least I waited and I built the right tolerance to waiting for a pullback. And then, I stopped out appropriately. Or let's say it works. The reward is so much better relative to the risk that I had to take. So the worst thing, in my opinion, you could do is chase something, because if it works out, you're going to reinforce that, I can just chase. And the next time you're going to chase with even more size. And then when it doesn't work, when it does that move, it's going to stink. So be disciplined, wait for your setups. I like oil long for now. Momentum looks really good, but I got to see the healthy retracement before I can really play anything on oil. But we'll see. I mean, that's a pretty impressive break on 73. We'll see if it can continue. Okay, guys, we got Chris Pulver coming in next. Before we break, let me just remind you guys, if you want access to the Edge Finder, to the stock box, send us a DM on our website. We'll get you hooked up with some New Year's discounts. Just send us a DM. We'll drop the link here in the chat. And Chris Pulver is up next. I got to run to the restroom. So Chris has got it from here. Thanks, guys, and stay tuned.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, happy Friday. Let me share the screen. And how's everybody doing? I'm just getting a couple trades posted in the Pulver Alert section. We have some news today. We're kicking off officially next week. It's still not going to be a full trading week because there's going to be a Jimmy Carter Memorial on Thursday the 9th. I just looked that up. I thought it was Monday, but it's going to be Thursday the 9th. So right before non-farm payroll, market's going to be closed. U.S. equities markets closed on Thursday. So we still don't have a full trading week. So it's going to be interesting to see how next week comes back in. We have non-farm payroll on Friday. And we're coming off the new year this week. So get a couple trades posted. And let me go to SPY, Symmetry, Head and Shoulders, 520 level. I like that trade. Yeah, I'm going to post this trade in here. Screenshot. So I'm looking at a little income trade on the SPY. I did an income trade on the ES, which is futures. So that's posted in my Pulver Alert section for A1 Trading Discord. Charts there. Oops, I need to put everybody in there. So give me 1 second. There it is. Okay. So nobody knows how this first little start of the year is going to go. I've been talking about this potential, hopefully it's like an orderly fall if we do fall. If it's not, and this market gets all excited to say, okay, we're going to come back in, we're going to fill this election gap, that could still offer some support. The bulls might still have some fight left in them. I'd say if we break this PCE low, it is doing a little bit of technical damage to the market, but there is this election gap that once we get filled, the market could be pseudo happy with that. That could still be symmetry. Remember, this is a high low, lower high to lower low. So if we hit that symmetry, fill that election gap, could the market offer up a bounce there? Possibly. Okay. So are we high to low, lower high to lower low, lower high to lower low? Maybe we just work our way down with some type of corrective move like that. And then we still find our 200 moving average, which I still think is a bar count that needs to be hit. We're now stretching into the 300. It's got to be close to 300 at this point. So from here to here, we're 293 bars. So because it doesn't count weekends and stuff, I mean, it doesn't matter how many days we've been apart. It's like how many trading days. So we've been 293. This is over a year, right? There's 250 roughly trading days a year, 293 bars since we hit this 200 moving average. So I could see price finding its way down to it. I could see price doing this like somewhat orderly and a little bit like of a controlled correction. I think everyone's concern is that this market just goes down fast. So the trade I'm looking at is it's an income trade that I would be willing to own the shares of the SPY, and I would own it at 512 if I'm taking assignment. So if I could say to you today, after sitting here at 609, that you'd have an opportunity to own the SPY at 512, if you have the cash to do it, would you be interested in doing it? I would say yes, which is why I took the trade. So if I don't take any assignment, I'm still going to make about $210 of profit, and I have a profit trap of potentially $710. So this is all within about 60 days. So in 60 days, I'll either have 200 bucks, 700 bucks, or I'll own, and I will repair this thing for, hopefully $3, $4, $5 a share, maybe more. Own the SPY at a really nice discount. Even consider that like, yeah, I'll hang on to it. I'll lower my cost basis. So anyway, that's the trade. So that's posted in the Pulver Alert section. I posted that under the index trades for the SPY. I also posted one in futures trades for ES. And those just got posted this morning. Okay. All right, let's have a look at everything else top-down wise. We do have some other trades running. Futures market this morning. Here is the 930. See if there's a breakout at all today. It's been pretty choppy. And is this my 930 candle on NQ? Yep, so NQ still a little bit choppy as well. We did have some 10 a.m. news this morning. That's it. So a lot of low impact stuff. We had the manufacturing PMI come in better than expected for the U.S., which is surprising. It's still below 50. Everyone's talking about the slowdown in manufacturing. The ISM manufacturer prices. So is this an inflation reading? Level of diffusion index based on surveyed purchasing managers. Component PMI reported separately as an inflation gauge. Above 50 indicates rising prices. Hey, what do you know? It's a leading indicator for consumer inflation. When businesses pay more for goods and services, costs usually pass on the consumer. So cool. Manufacturing PMI went up, so did prices. Guess who's going to pay for that? Consumers. That's the same story we've been watching for the last 3-4 months. How's the market taking it today? So far, we're still red on the week. We did bounce off of the PCE lows. So this is the low from this was Wednesday's Fed, Thursday's chop, Friday's kind of fake out trade to the downside before we had that little Santa rally, which, by the way, today marking the official Santa rally end. This is where we started for Christmas Eve. This is where we are today. So Santa did not show up in 2024. He did until he didn't. So he somehow got lost. He needed to, use the high-tech stuff that they use in Red One. It was not that Santa this year. This Santa was a little bit more discombobulated. Is that a word? Anyway, I guess disoriented. So it looks like we're going to finish negative for the Santa rally, which would be the third time in 70 years, having back-to-back losses. 2023 was also a negative Santa rally, despite being 20+% up for the year. This year, unless we get like a late day rally, which could happen, of course, but I don't know. Anyway, vulnerable to the downside if we break below the PCE lows. And below those PCE lows, like I said, there's symmetry there. Watch that gap fill from the election, that post-election rip. And is this just an orderly little correction back down to the 200? Does it get a little bit nastier to the downside? I don't know. But let's go top down. So Q is looking the same way. This hedge I closed out for profit. So that's done now. That's a clean trade. Nice little win. I didn't quite get the profit that I wanted, but it was close. So I paid $585 per contract, and I closed out for $1330. So I made $745. That's 127% return on capital, which I was pretty happy with that position considering it's a hedge. I could hold it a little bit longer, but I was already going after $1,000 profit. I closed out for about 75% of it. So I'm taking it, and that gives me 3 successful hedges. Hedged on MES made money. Hedged on ES made money. Hedged on SPY made money. Actually, 4 hedges. Hedged on QQQ made money. So that helped offset some of the drawdown that I've seen the last couple of weeks by grabbing some hedge profits. Okay, so QQQ, same type of thing. Here is the post-election. So if this is high, low, lower, high, lower, low, lower, high, lower, low, maybe this is, like I said, orderly decline coming back in to fill this election gap. So there's a little bit lower to go. We'd get to about 490 or so if this comes back into fill. And that's if it stays cooperative, right? Maybe this is, we're sitting here and then kind of flagging and then it gets worse to start things off. I don't know. But if you look left on this chart, okay, if you look left on this chart, there's still a lot of support in this index. So if we came down anywhere between this 144 and 200 moving average, I'm interested in establishing some positions here. We could come all the way back down to this level as well, which would be, doesn't necessarily have to test or threaten the August 5th low, but it would come back into, let's say 460 to 440. So I'm willing to remain a bull in those areas. All right. Now, remain a bull, but also I'll still be protecting because you never know how quick sentiment shifts. If we get down to this area, does it capitulate? Does it get worse? Does it have a dead cat bounce and then go lower? Does it actually flush out and take out this August 5th low? I don't know. So yesterday, I posted this in my trading journal. I did updates on BITO. I actually started out with Baidu. So I updated some break evens. I added in some collar trades. Right now, I have a break even around $86 on Baidu, and I'm still looking to hang on to this. My upside is 95. My protective put is 70. I'm going out to February. So that's an updated trade for me on Baidu. BITO, having some of these ownership positions on the Bitcoin exposure. This has dropped a decent amount. I'm really happy that I got out those long calls. Now I have a March 30 by 15 collar trade. So if we have a big move to the downside, it's protected. It's an out of the money put. So if price moves quickly to the downside, I'm protected. If price just works its way back up, $30 isn't quite to the all-time highs. But this one with the dividend, the dividend and the repricing that we have here on BITO, $30 might be. I mean, we might have to hit all-time highs again on Bitcoin for BITO to hit $30. So I think if anything, I'm just going to lower the cost basis. I did all these collar trades at a credit, by the way. So this one was about a 55-cent credit. And then on JD, I lowered the cost basis on this one as well. I have a 39 by 30 collar. My break even is 36.82. And if it gets called away for $39, I'm just going to make what's $2.18 per share. I'll make over $1,000 income on JD. That was another one. And then OXY, I closed out. I have a 50 by 40 collar trade in this one. We're going to see what energy does. We're going to see what oil does. If it gets called away at $50, my break even's 48.63. I'd still make $1, what, 37? So $1.37. I'm in 500 shares. I think I'm on my portfolio margin accounts. I have 7 of those. So make about $4,800 on OXY if it gets called away above $50. So if it has to stay here, that's just fine, but it's collared, it's protected. So if it goes down, I've got it protected to $40 out to February. If it goes up, it gets called away above 50. That's fine. I'll keep the income. But just wanted to add some protection plays. Let's have a look at China. China is up. China's up a little bit. HSI is positive. Alibaba, man, I mean, not anything super exciting. So we had a slight gap higher today, which is why we're showing some green. But I have reduced a lot of my exposure. I still have shares of Alibaba. I still have shares of Baidu. I'm out of FXI for profit, out of KWeb for profit. I still have shares of JD, SCHD, SCHG. I do have some exposure in both of these. The advanced decline, let's talk about this for a second. Let's look at the stocks. Yeah, this is good. This would be a pretty interesting buy-in indicator. This is the S&P stocks above the 50-day moving average. Right now, we only have about 17%, 17.89% of stocks above their 50-day moving average. Okay. Now, going back historically, this has coincided with a lot of bottoms in the market. So did I put... I guess I wrote that. I was like, oh, I did label it. But anyway, I labeled it right there. So, going back into what's the timestamp here? September 2023, we had a nice little bottom in September, October 2023. Go back into September, October, excuse me, 2022. Nice little bottom in there. So anytime that this indicator of the 500 stocks in the S&P that are basically showing that most of them are all below the 50 moving average. That to me is it's a bit of a contrarian play, but it's coincided really nicely with some timing the market. So in a way, I kind of hope that we go a little bit lower. We put a little bit more pressure on the underperformance of the market breadth, and then we see if we have a chance to, scoop up a dip. So that's one way to kind of time the S&P a little bit. And I found the same indicator, the 50-day moving average on the Nasdaq, which right now we have about 27.7% of stocks above the 50-day. Same type of thing here. If we come back into if we're in, let's say 11 or less, I would say 11 or lower, probably a timing indicator for the Nasdaq. But difference is, it's not 500 stocks. This is only 100 stocks, and so with the Mag 7 still performing well, those are let's say the top 7, the top 8, the top 10 stocks that have performed pretty well, carrying the market most of this year, consistently at least. And then we had a couple of spurts of market breadth. But if we get down to like 11 or less, that's another timing indicator for the Nasdaq. Okay, added in some sectors. I talked about these yesterday. I did take a trade on XLC, so communication services sector. I put in a 1-1-1 trade, so the income is $55. I did 2 contracts, so it's $110 if I don't get any assignment, but I'm willing to also take on the assignment for the sector in XLC. I looked at XLK, which is tech, but it's a $234 sector. Not that interested in it, unless it is a little bit more attractive price-wise. So does it come back down to 220? Does it come down any lower than that? Yes, no, maybe. But sector-wise, like, I don't love the price on this one, so I wasn't really willing to put the assignment in. But anyway, we are, on the decline for communication services. We're down on consumer discretionary. This is probably going to be the most strained. I think this would be one of the most strained sectors this year. I think the consumer is going to run out of money. I'm not talking like breaking the bank. I just think that consumers are going to have to get a little bit more budget friendly and stop funding their life with debt and stop living on credit cards. The amount of delinquencies have gone up. The amount of canceled contracts and housing has gone up. There's just all sorts of dynamics we talked about a little bit yesterday. So I wonder if the consumer discretionary can also be carried by like the top 10% of income earners. It can be carried by the top 1% of income earners. We all know that the wealth gap continues to grow. The disparity in this country gets worse and worse and worse, as it does most places. But if the 1% start to scale back, that will trickle down probably a lot heavier than the bottom, 99%. But still, consumer discretionary, if you don't need stuff, you're probably not buying stuff. If you want to budget and your New Year's resolution was, I need to save more than I spend. Well, this is probably a sector that I wouldn't really want to be in unless it's heavily discounted. So if this were to come back down, let's say 18% correction, I'm a little bit more interested in it. How ugly can it get? Well, we had a correction here back in 2022 where this thing went down 41%. It actually was more volatile than the index. So keep that in mind. Like, even though this looks like an attractive spot to pick up a level, these are probably going to be more volatile than the indexes themselves. So if you want to trade and have like the least amount of volatility, I do think you stick with the SPY, you stick with the QQQ, you stick with the SPX, NDX, you stick with the indexes that are, essentially play in the haystack. Right? Right. So anyway, we'll keep an eye on that one. XLP, this is consumer staples. This is stuff that you need. Right? Now, technically speaking, where do I want this one to go? Well, if it came back down into this area, way more interested in this area. Is it going to happen? I have no idea. But if it falls, yeah, I'm interested in maybe scooping this one up on the discount. But probably not a good sign for this to be like a broadening pattern. If it came all the way back down here to like $70 or even low 60s, I think that's a good opportunity to buy it. But that's a long ways to fall. So I'd wait on that one. Energy sector had a nice bounce, probably range bound on this one. If anybody bought XLE, I don't know if Nick put in like a sell put on this one, cash secured put, which isn't too bad. Energy is going to be a big part of the inflation story in 2025. We look at oil. Oil is just still getting hammered back and forth between these really tight prices, right? Oil is 73.69. That's a bit of a squeeze on oil. Okay, what was the reading? Oil futures on track for solid weekly gains. Energy stocks advance. Oil falls on China. Well, that's 2 hours ago. Oil doesn't look like it's fallen when we got 1, 2, 3, 4, 5 days in a row. Now, I've said this the last probably 3-4 weeks. I don't know if oil has what it takes to make a convincing break above this 200 moving average. We can pop up here, have a little bit of a squeeze, and then quickly fade back down, and we come back down to the lows again. So this is what I'm noticing has been the trend the last several months. Now, if we get a convincing break, I would say we probably have to get above like $75 or $76. If we get a convincing break and we pause here and we go higher, then again, more concerned about inflation. So that'd be higher inflation. That would be probably putting pressure on the equities market to maybe show some breaking below that PCE low and this week's low, maybe coming back to retest that election gap. That would also be putting pressure on probably the bond yields. Okay. If oil's expensive, wouldn't stuff based around an increase in price? Yep, that's an inflationary game. If oil's up, I mean that makes energy prices higher. That's going to be sticky inflation again. And look, we have seen higher inflation readings since September with oil prices going nowhere. So if oil's going up, that adds to the potential issue, right? I don't think this inflation thing is going to be easy. In fact, it's far from it. So, we talked about it yesterday. It's like, does the Fed pivot hard this year and have to raise rates? That would be not what the market wants to see. And that would still put the 10-year yield, which is probably showing green today. Yep, another 0.35%. So it's like this 10-year yield is not showing any signs of stopping. I wouldn't be surprised if we're having this conversation in the next 3 to 6 months. We've already, made this little rally up towards 5+%. So it's concerning because the last time we rallied up that hard, we did see a break in the markets. Like as this was going higher, the stock market was falling hard. Okay. So as this was going higher, the stock market was falling hard. It topped out here. We actually saw a bottom, interestingly enough, a bottom in the stock market when this thing topped out. So, we're only like 4 to 5% away from all-time highs. So if this goes higher, this could easily climb to like, 7%, 8%, 10% corrections in the market. It could get uglier too, but you got to watch it. Okay. All right, Daniel, good stuff, man. All right, that's the 10-year. Let's go gold and silver as well. So we've got the indexes. Russell, I'm not really touching the Russell. The Dow maybe finding some support here with the election fill. So we have the election fill, maybe a little bit of stability in here. But I'd like to see it just drift a little bit lower, offer the Dow a trade in there. So I might look at a trade if we do come back into this 144 to 200 moving average. I may look at an income trade, either a credit spread or some type of like 111 in the index, where I can take a low risk assignment and a high probability income trade. But I want to see if the IV is a little bit higher, which it should be. It's probably up in the 20s if I go DIA. We're at a 28.2 IV rank, so we get a little bit more premium out of this one, which isn't bad. So I'll keep an eye on that. Russell, probably not touching that one too much. Like I said, volatility index, slightly elevated volatility. 15 is pretty good. Like that's decent, reasonable volatility. The one thing to remember for 2024 is we had 2 of the largest single day VIX moves ever, which is kind of crazy. So do we have 2025 with elevated volatility, but not this like, outlier VIX move? Do we have like a 2022 repeat where we were going from like 20 to 35? I don't know. The VIX is always a interesting instrument. I would be long volatility in here, right? And I would be basically looking to revert volatility anywhere above 30. Yeah, dollar's probably going to be the winner there, Jonathan. I think that I've said it for the last several months. I mean, since we had that squeeze on the dollar and we didn't stop, it's like the dollar's probably going to be the strongest play moving forward. I mean, and the crappy part is it already feels like, well, I missed the move. Well, you did. You kind of missed this squeeze. You kind of missed the add-on trade. You missed the sweep of these highs. I mean, I think that if the dollar does not turn aggressively here, that this dollar is going to be in open space to buy the dips and trying to go after these highs here. I really think the dollar can make its run to 114.15. I still don't want to call the top on the dollar, but I'm way more interested in like a larger macro sell on the dollar. Okay. And again, if the dollar gets stronger, it's going to be, really disruptive for the forex market, because we're going to see some really stubborn irrational trends, and also we're going to see some. I mean, we'll see like 1,000 to 1,500 pip moves. We'll see 2,000 pip moves from high to low, or low to high. Like, it'll be a huge move, right? So how's my dollar CAD? It's getting closer. Come on, dollar CAD, you can get there. So I'm only about 30 pips away from my profit target. And my dollar Swiss, I'm about 100 pips away from my profit target. So looking to close in on those for some profit. Aussie dollar, I'm still keeping it very small. The dollar cost average into this one. New Zealand dollar, still looking at dollar cost average into this one. Euro dollar, still making fresh lows. This is a trade that if you fade, if this pulls back, look for a trend line break, look to fade euro dollar. I think this is going to parity. So, if you want to get into the smaller time frames, just watch the higher time frames, because we could have like a pullback here. We could run some levels but then fade. But I think parity is probably going to happen. We already hit it back in 2022. We could go through parity by, several hundred pips. I'd be willing to take the trade off of that or lower, but I think until then, if we get any type of pullbacks here, I think this structure low would be a good spot to look to sell. Trade there, pulls back again, trade there, stop loss kind of above this 105, 106 zone, get myself a little bit of wiggle room to get some entries, and then see if this dollar continues to go lower. So euro dollar goes lower, dollar gets stronger, and just stay with this overall trend. Okay, New Zealand Swiss, all the Swiss pairs I'm still holding long. That's still my trade. I'm still long. So I'm holding long. It's positive swap. It's obviously technically needs a little bit of work. Hopefully this is going to, if this is like push down, pull back, push down, pull back, push down, there's a potential bottoming right there with that flash crash low from August 5th. I would look at that as a strong support level to kind of work its way back up into the center high. That would be that's like the exact same trade as dollar Swiss. The difference is dollar Swiss is now, after hitting this low, dollar Swiss is almost back up to the same high. So dollar Swiss is almost to my profit target. New Zealand Swiss, if this heads down a little bit lower towards this flash crash bottom, if we hit that level, I would love to add more positions on my New Zealand Swiss, which I already have positions in. I did a lot of averaging in here, and I did a lot of averaging in on, let's see, I did a lot of averaging in, trying to think where. As this was falling, averaged in, averaged in, averaged in. We had our flash crash low, had some profit, didn't take any profit on that, waiting for a trend line to break, waiting for a trend line to break. So I'm just dollar cost averaging in. But point is, if we come back down to revisit this level, this would be the center high that I want to go after. So if I can stack some more trades over here, so I'd want to wait for price to come back and find this low, and then stack some buy stop orders, and if price goes up, that's my profit target. So I can turn most of these trades into profit. Not all of them, but most of them. I was trying to go after 6,000 when I started this positioning. So I had an equal low there, had a trend line break there, started to stack in some orders. So I've taken this thing up for some profit, but unfortunately didn't take a lot of profit. And then I got back in at this low, flash crash, and then on this trend line break, I'm still kind of waiting. Okay. So if we end up getting more trades, I'll add in over here and start stacking back in towards 53.50. There's a measure move. We can get all the way back to like 56, but patience on the trade. For me, patience. Okay. Yen pairs. I think if you've heard me in the last 10 years of trading, 15 years of trading Forex, and probably 10 years of teaching others, you'll probably hear me say I don't like the yen at all. So I'm not trading the yen. I don't care what the yen does. I don't care what the Japanese yen does. I don't care what the Bank of Japan does. I don't care what the dollar yen does. I think the yen is the silliest currency pair to trade unless you are following what you see. So stick with a direction, stick with the 4 hour, 1 hour alignments, trade what you see. Don't fight the flow of the yen. Don't be a hero. Don't call the top. I have no idea what the yen wants to do. Okay, right now, okay, euro yen, it's just a giant range. We had that huge disruptive move from high to low, and I could see this still being a huge channel. So is there a channel in here to trade? Yes, no, maybe. Okay, that is not going to be fun or pleasant. I'm not going to take the trade. I said this for the last probably 3 months. The only way I'm going to trade Japanese yen is through the Japanese yen futures, because I can do define risk, not get my stop losses hunted, not play with interventions from the Bank of Japan, and just put in a risk that's hopefully favorable reward to risk. So 6J is going to be the way that I trade it. Okay. And what I'm wanting to see is, will this come back down to a level that is a kind of no-brainer risk-defined trade? Yes, no, maybe. So I will probably go out as far as I can in the Japanese yen futures contracts. I did this where I can get about 125 to 150% return on capital. So I get a little asymmetry to the defined risk side. If it goes through it, then I just risk defined. It's like I'm risking $250 to make $350 per contract. So would I step it up to make, $550 a risk to make $750 to $800 a profit? Yeah, that's about my wheelhouse. Okay. All right. I don't have a stop loss, Rafal. I don't have a stop loss in New Zealand dollar. I'm trading small, and I'm willing to scale into this one down to, I don't think it should go too much lower than 5,500. It shouldn't go too much lower than that. But if we have like dollar strength continuing, I'm in 3 small positions right here. Okay. If this goes lower, I'm already committed to this. I'm going to do a 5,300 and a 5,000. I'll take a 4th and a 5th entry right here. Drawdown wise will probably be, I don't know, maybe a 1 to 2% drawdown. And if I can get this thing, and I don't know if it's going to hit 5,000, but if it does, and I'm in a 1 or 2% drawdown, okay, I can manage the drawdown and then stack my way back up, get these, buy stop levels to get filled, come back to this support, which I firmly believe will get hit, and turn, I could do this. I could take, this trade could be break even. This trade could be a loss. This could be a loss. And I can stack up winner here, and then stack up like 3 to 5 more winners here, right? A bunch of winning trades there. So I can eat these positions and say, okay, I'll take a small loss there, but work my cost basis lower, and maybe get my break even from like 5,300 or 5,250 back up to 56. Take 300 to 400 pips net on the profit trade, but I'm willing to ride this thing down to 5,000. And I know when I say that, everyone's just like, that's crazy. Where's the stop loss at? That's way too much risk. I can never afford to do that. You're probably right. You probably can't, because you probably trade too big. So this is how I trade Forex. I trade really, really small. I give myself wide open spaces to work with. And then when I believe and I see that price is working in my favor, I see bottoming patterns, I see confirmations, then I put a lot more positions in the direction that price is going. Is that a martingale? No. Martingale is a stupid strategy, because all you're going to do is keep doubling in until you lose everything. So that's a stupid strategy. It's scaling in. Okay. And how do I scale in? With like 1 unit different in price size. So it's, 10 cents a pip, 10 cents a pip, but it's a unit different. So the broker recognizes it with non-FIFO, and I'll trade, micro lots until it adds up to a couple of dollars, and mini lots until I trade a, half a standard lot or standard lot, and I build it up. So, eventually I'm trading for $5 or $10 a pip, make 200 to 300 pips net, and it ends up making a couple $1,000. So I do that a lot. And if I get, 10 trades like that for the year, and I can make, $30,000, $40,000 in Forex trading safely, I do that almost every single year. My bigger trades, when I really like a trade, I generally can make, 20, 30, 40,000 pips. And it adds up to be, my biggest year in Forex. I mean, I've made, I don't know, I'm trying to think, for all my managed accounts in Forex, I think I made close to like $2 million in a year in Forex trading like this. And I do a lot of this on probably less than a dozen trades a year. So if I find a trade I really like, I do spend a lot of time nurturing these positions, but I just give myself a lot of space. Okay. I can afford to let the market go against me. I don't want it to, right? But I can afford to trade small and manage my risk. Do I stop out of these trades ever? Yes, but I don't stop out of the entire position. If this went down against me a bunch, then I just close out the worst position and then just re-enter. So I'm willing to take losses along the way if things get really nasty, because it's silly to hang on to a trade. If I'm down, 500 pips on a trade or 1,000 pips on a single entry, I shouldn't be in that trade. I should get out of that trade. So I do take losses. But when I give myself open spaces and bigger time frames, I usually can work these areas where it doesn't have to stop me out. So anyways, that makes sense. And again, I know if I say that, it could be just, I don't know, people, I've seen like the look of confusion, number one, and just like nobody really gets it. So it's a hard strategy to teach. Okay. but it is the most success that I found in the Forex market. Okay, I don't have to look at charts every day. I don't have to sit and care about non-farm payroll. I don't care about any news in the Forex market. I really don't care about the fundamentals either, right? Forex to me is a pure technical market. So you trade the technicals, right? It's amazing how fundamentals fall in line and prices start to go your way. And like all of a sudden the news is all of a sudden supporting the direction the market's going. It's almost as pure technical as you can get. So that's what I trade, and the way that I take it to higher time frames, it's yeah, with the higher time frames, I just have less noise, right? So overall risk, yeah, I mean, generally, I'm willing to take on a certain pair. It's like I'm willing to accept like 3%, 4%, 5% drawdown on some. But in order to accept that risk, I do want to make sure that my reward is bigger. So if I'm accepting a 3 to 4% drawdown or 5% drawdown, I expect to have the trade when it's all said and done to hopefully pay me, 7, 8 to 10%. I want my reward to be bigger. I just have to be patient enough to, number one, not trade too large up front. Number two, continue to, work the positions the way that I want to like scale in, not scale in. And I'll say this, I'll make this really simple. Okay. There's two ways the market works. If I'm looking at this market as, okay, this is in a downtrend. Well, if it's in a downtrend and I'm trading the downtrend, great. But if it's in a downtrend that I'm like, I'm already late to the game, I'm not going to chase this thing, I'd be selling it low. I don't want to sell low. So what I do instead is I look at it this way. If this is in a downtrend and it's coming into support, what I do is I'm looking at like, okay, I'll start a trade here, and this would be an anticipation trade. Okay. So what I might do is I might start putting in 1 or 2 anticipation trades. And then what I'm going to wait for is hopefully a trend line break or some type of price pattern. Okay. And then I start to look at adding confirmation trades. That's really what I do. So I'm willing to start really small with anticipation trades, and I start to scale back in with confidence that price can go my way on price patterns and confirmation. Then I start getting the trend lines to break. Then I start getting the oversold conditions with diversions. Then I start looking at a little bit more, okay, right side of the trend line. So if I build small here, add consistently here, and let's say my profit target is back here. Okay, so what do I do? Well, I manage my drawdown here. So this is where I'm down. I'll put this in red, I guess. So I manage my drawdown in these small anticipation trades, and then I add to my confirmation trades. Does that make sense? So anticipation trades, I trade small for this reason. I don't know where the bottom is. Okay. Confucius say those who, pick bottoms wake up with smelly fingers. So I get it. I got to trade small so I don't get into too much trouble. But once these anticipation trades start to pay out and confirmation trades are also going my way, and this is my profit target, well, these turn into winning trades, and all these turn into winning trades, and I make money. And as long as I keep this side small, I don't get into too much trouble. I keep the drawdown manageable, right? Let's say 1 to 5%, and then I turn the positive side, let's say, 7 to 10%. That works really well. But it's all about this side of the trade. If I'm going to start early, I got to start small, you know? And the argument is, well, Chris, why don't you just not trade any anticipation trades, wait for confirmation? Well, because if I miss the order or I don't start dollar cost averaging in, early enough, like I might miss the actual entry, or I'm getting in later. So I just because that's like I still see the structure. If the market's going to bounce off support, I want to be in at support, as opposed to it's already bounced off support and it's trading a wave 3 that I missed. So anyway, that's just a bunch of drawing, but you get it, right? All right. EETH is the one that I'm in for Ethereum. That's what I've been using. We're back up to $70. Bitcoin's back up to 97. Oh, big run on old Bitcoin. Cool. Okay. All right. We're good on the Forex stuff for right now. That's where I'm at. That's how I trade it. That is 17 years of trading Forex in 20 minutes. Does it work? It is the most consistent way that I made money in Forex every year. Does it pay me every month? No. It pays me in a 12-month span. I typically make some really big profits in, let's say 5 to 10 trades over the course of a year. I never like to be forced to take a trade in Forex because if it's not a good setup, I don't want to touch it. So, Do I like the dollar stuff? Yeah, I like the dollar, and eventually the dollar is going to be a great trade, right? Right now, the dollar's already been, if you're long the dollar, you're freaking killing it right now. Okay. I'm long dollar CAD, I'm long dollar Swiss, I'm crushing those trades. We're going to make a lot of money on those trades. That's great. I'm long Aussie dollar, New Zealand dollar, and I'm early. I know that I'm early. Okay. But I'm willing to ride those trades out a little bit longer. I'm willing to see, you know what? I think the dollar wants to get a little bit stronger here. Then the trade I'm looking at here is probably short, or I should say long euro dollar. If this trade reverses, I'm going to get long euro dollar probably pretty heavy. Again, anticipating and then confirming, and then maybe taking a trade on euro dollar that's like, 100 down to 98 down to 96 and take it all the way back to 104 105. But I don't want to sell the euro dollar now because it's already at like 102.80, 10300. I'm not that interested in riding this last little stretch down to parity or maybe a little bit lower than parity. I'd rather let the dollar get so overbought and so extreme that it becomes a macro trade that I can follow. And I can make a lot of money on that. Okay. All right. So dollar index, don't fight it. Japanese yen, don't fight it. I'm trading futures. I'll wait for my dollar crosses. Let's go gold, silver. We did oil. If oil makes a convincing break, you got to watch this level. We've been rejected by the 200 moving average a lot the last couple of months. And so, I would say that oil has made a nice little 4-day rally, but it did that before where we had this like 4-day rally, then this gets faded, 4 or 5-day rally gets faded, same type of thing here. So if this gets faded hard, then it's right back where we started. Okay. I don't think there's, a support level here that's going to be breaking hard unless it's a fake out. Something tells me that oil prices are, to me, the probability is higher probability of going higher than lower. I think if anything, this would be a bear trap scenario, and I think oil breaks higher. So again, that's the inflation story that doesn't make it easier, but that's where we're at. So there's that. Gold had a nice couple of days. We're still in a bunch of chop. I think gold can still pull back, especially if dollar's getting stronger. Gold will likely fall into like the 25, 24.50 zone. I like it all. I like 25, 24.50, and 2400. I will be looking to add more positions in there. Silver and gold still like the trades. Silver's responding nicely off the 28, almost $29 level. If it holds here, I've said this on silver. What I'd love to see on silver would be find this trend line support, come back up to this level, give us a little bullish pattern here, and then finish this move up into my target one, which is around 35.88. I love that trade to be silver. If not, there's still a lot of support back here around 26 bucks. So if silver is, pulling back and using the trend line, and we find some of this, I'll just wait for that structure and I'll add more over here. But I'm still trying to get silver up to 35.88. I'm still trying to get silver up to $45. Might take some time, but I'm pretty committed to that trade. Bitcoin, nice little run. We came back to 91.3, pulled back to the 30%. I'm not that impressed with it. We'll see what happens. I mean, this little symmetry level, high, low, this could be a flat pattern here. So I wouldn't be surprised if we have another flush lower. I've said the 90K mark. I said the, kind of 80 to 75K mark. Let's just put like 75K down here. That's my window. I'd like to buy some Bitcoin, 90K to 75K. I added collar trades on IBIT, FBTC, BITO. The nice thing is my Ethereum, which is greater than 60 bucks on EETH. If it stays there, that's full profit. Anyway, but Bitcoin going up is good. Let's see what happens. There's a pretty compelling argument like Bitcoin in 2025 will be, I think, an important asset to watch. Having this run and this, I guess it's just more conversational. Like it's certainly more accepted. It's more regulated. It's now securitized where, any average stock account, any average, ETF buyer can now have Bitcoin exposure. You don't have to have like the comp. And again, I'm not saying this is the right way to do it. I mean, if you got your enthusiasts and purists out there, they're like, not your keys, not your cheese, and never lose your password. It's like, that's a whole different side of Bitcoin. This is where financial advisors can say to their clients, like, look, having a 1% exposure in Bitcoin has helped double your portfolio over the last decade. Now, they didn't do that because nobody had exposure to Bitcoin this way, but you can now own IBIT or FBTC and have that exposure and have it be very, very small risk and overall allocation of your portfolio with the potential of this thing, doing pretty well, right? So anyway, if Bitcoin somehow has this stellar year, outperforming the broader markets and outperforming the indexes, it just kind of continues to feed into this narrative like it's a pretty amazing asset. Um, I think that now that it's securitized, I think it is hand in hand with risk on, risk off trading. And so if we go into a risk off environment, I do not think Bitcoin is immune to risk off trading. It has shown direct correlations with money flow. It's shown direct correlations with the Nasdaq. Um, and I'm surprised that it's actually holding up this well, considering the dollar's been getting stronger and gold has been down. So gold down, Bitcoin down slightly, but dollars up. I mean, I'm curious where this goes and risk appetite. There's been a decent amount of outflows coming the last couple of weeks since the Fed, especially. So we'll see what it does. I would hope there's a little bit more of a pullback, right? So if there's a little bit more of a pullback here, I could see a flat pattern, high, low, and we still flush one more time. I would like to see that area offer up some technical support and see if this trend will continue. You can look at all the moving averages here and see this dynamic level. So if we fade, into the 144, the 200, I'd like to scoop up some Bitcoin. Higher highs at this point, like nobody really knows how high we're going to go. Getting back to this high was impressive. Hitting 100K was impressive. Now what? Now it's 200K the mark. Now it's 250K the mark. I don't know. But either way, it just gets more exciting. Does this transfer into other stocks doing pretty well? Yeah, it could be. MicroStrategy at 318. I mean, heck, I can get this one called away. When? MicroStrategy, I've got a collar on this one. I think I went out to the end of, how far did I go out on MicroStrategy? MicroStrategy, sweet. I might get Pfizer called away today for, that should be some good profit on Pfizer. Let me check. Pfizer should get called away today. If it stays above 2650, come on, where's my tracker? Pfizer gets called away for 2650. That's a decent chunk of profit. This is 24.72. Get it called away at 2650. That's $1.78 on 1,000 shares. It's about 20 grand. $19,580 today if it stays above 2650 by the close. Fingers crossed. I want Pfizer to get it called away. NVIDIA, well above my strike at 140, so maybe some income there. I was talking about MicroStrategy. I have the 305 and the 245. So if it gets called away at 305, I'm flipping this stock for about $1,400 profit. That is 1, 2, 3, 4, 5, 6 accounts. So again, another chunk of profit to kick things off this year. $1,400 times 6 accounts. I'll make $8,400 on MicroStrategy, and I've owned the shares for possibly a couple of weeks because my covered call is out to the 31st. So if I own it for 4 weeks and I make what, $8,000 or $9,000, like I'm okay with that. I am okay with that. So anyway, it's fine by me. I didn't intend to own MicroStrategy for a long time. I wanted to use options to lower my cost basis. What I like about this is I bought this thing in the Pulver alerts at 346.90. Intentionally use options. My cost basis right now is $291.20. So I'll make $13.80 a share. I've lowered my cost basis over $50 in 2 trades. I cannot tell you how powerful option trading is other than this is a great example. I buy a highly volatile stock, okay, lower the cost basis in 2 weeks by $50 and get it called away potentially in the next 2 to 3 weeks for a nice gain. I mean, am I going to look in hindsight and be like, oh, I should have held it? No, I'm just going to take the income and I'll probably do it again because there's so much premium in this trade. I might just keep doing it. As long as I can buy it, put on a collar trade. If it gets called away, it gets called away. But generate income each time. Like maybe that's what MicroStrategy is for me this year. It just helps me own it, protect it, own it, protect it, own it, protect it, and generate some money on it. Okay. All right. So a little bit of MicroStrategy there. Coinbase. I took out the bull call spread for profit. Now I have a 111 for income. This one should be good. I think it's January 17th. So a couple weeks out. Coinbase. Yep. So I did the monthly expiration year. It's a 220 by 210 by 200. Right now it's up $300. Max profit's 333. Let me see if I can get out of this thing for Yeah, I mean, I can close out for most of the profit right now. Can I get out for a 25-cent mid? Nope. Can I get out for 26-cent mid? I might just take the profit today. I just got to fill for 26 cents. All right, I'm going to take the profit here. If anybody's in this Coinbase trade with me, I'm going to close closing for 25 to 30 cent debit. So I'm going to take a majority of the profit. My max profit is 333. That just closed out for 26 cents. So 333 minus 26 is 307. So I'm keeping 92.1% of the max profit. Rather than waiting another 2 weeks, then I'll just take the profit now and take the 92+% max profit. So I'm going to close this one down. I'll update that in the Pulver alerts as well. Okay, so that one is closed. Now it's down to 20 cents. Okay, I see you, Coinbase. See if I can just get above the mid price. 22 not filling. Let's try 23. Worst case is I'll take the 25, 26 cents debit. As long as I get over $300 per contract, I'm fine with that. All right, I'll just go 25 cents or 26 cents again. All right, 25 cents fill. Perfect. 1, 2, 3. Close out for, let's go 25 cents. Filling there. This account. 1, 2, 3. Close 25 cents. Maybe 26. Fill the 25 cents. That's good. And this one should have both right here. Here we go. And close at 25. Okay, those are closed. So that trade is done. Coinbase closing up for a profit. I'll update that in the Pulver alerts. I got to find it first. Coin is going to be in the stocks options trades. All right, let me search there it is. Coin closed out the bull call spread. Here it is. Jump in this. I'm updating this right now. So this trade was posted on November 14th. So I'll do a little reply to this guy. Coin trade update. Coin. The coin 111 trade. Enter for 333 credit. Closing for 25-cent debit. Net profit of what? 3.08 per contract. Okay, it's posted. Trade's done. Ethereum. Nice little rip on Ethereum. EETH, I need to stay above $60. I could probably close this out too. This one's not as liquid, but it still looks pretty good for profit. I am sitting in this one through most of these trades. EETH is up around, so I've got open positions up around $9,000. So I have most of these expiring in 2 weeks, but I want to eliminate some of the outlier risk. If I'm in majority of the profit here, so I've got 82% of the profit, 93% of the profit, I will evaluate those to see if it's worth closing. The bid ask might be a little bit wider than I want, so I might sit on it a little bit longer. I'm also willing to take an assignment. I mean, if I own the shares at $60 and put on a collar trade, it doesn't tie up a lot of capital. Like owning this ETH and protecting it, I'd be totally fine with that too. So I'm going to let this one go all the way to expiration. But if it closes out by the 17th and it's above $60, then I'm looking at $90, $100 in profit. Maybe more because I'll get more decay. Okay, gold, I did gold already. Gold, I want to see gold get to like 2,500, 2,450, 2,400. I'm looking for a pullback. High, low, lower, high, lower, low. If gold comes into this area, I'm going to scoop it up. I'm scooping it up. I'm waiting until then. I'm not interested in this chop. Whatever this is, I'm not trading it. Okay, if gold goes back to retest the highs, it's fine. I'll just ride it. But I'm adding positions to gold down here. That's where I want to be adding to positions. We have a pretty decent bar count on gold, so I'm going to wait. I want to see if we get a pullback. Okay. All right, what else? Argentina. What? Look at that freaking move. Wow. FTSE, okay, fine. DAX, looking pretty vulnerable to the downside, actually. After that to me looks like capitulation. That's capitulation. If this has any type of bear flag look to it, we could come right back into that 200 moving average. So Germany looks like it would be on the heels of a pullback. China's fine. I still wonder what China's going to do by March of 2025. What are we going to do here? Is this going to be, a bullish trade? Is China going to do anything good? I just think the sentiment around China is so negative that's why I'm long. And maybe I'm stupid for doing it. But I'm doing it with controlled risk, and I have some shares, and I've got some collars and whatever. But I still like the potential. Just can anything besides the U.S. go up? I guess Argentina. But it's like I still think China has profitable companies that apparently nobody wants to trade. So I'm curious what it does. Maybe it's good, maybe it's bad. But this is what animal spirits look like. Okay, it's the potential, and so if there's any type of follow through like this push up to this pullback here, if we have any follow through, if this is an impulse, wave and a pullback, and there's another impulse wave coming, well, obviously I want to be having some exposure to that because there was a ton of profit there. So anyway, I mean, I would say from last year's gains for me, I didn't take a ton of profit in September. I had like $40,000 in profit, and I think I protected about 15 of it. So I still have, some additional profits to work through. I've lowered cost basis. I'm just hanging on to the trades. But, if we get another run back up here and higher, I mean, I'm obviously going to work more profits there. So, but to be determined. I think that's going to be fairly quiet on the stimulus front. On the the narrative will be kind of non-existent. But based on that kind of technical double bottom and coming back to this level, getting back to the center high, like all these things look good. And if this is going to continue to be what could be a double bottom pattern, the true measurement is going to be double that move and take it higher. So if this is pushing up here to pull back again and then breaking this level, that's where we start to double this thing. Gets really exciting to the upside. This could take months. This could take a year or more, but I am going to continue to kind of follow this trade. All right, Mag 7 stocks. We have nope. I mean, markets are up today. What's leading? What are movers and shakers today? Nvidia. There it is, everybody. What's leading the market today? Nvidia. So Apple, Amazon, Google, Meta. I still think we have a pullback towards the 200 moving average, if not further. Microsoft. I wouldn't mind looking at a 1-1-1 trade in. I have one right here. That's a ratio spread that I've got out to February. This one is a ratio spread that I also have out here. I don't think I've closed either one of these. Let me check. Microsoft. Yep, so I've got the ratio spreads. That's a ratio spread. And that is a ratio spread. And that is a bull put spread. So all income and up around $400 with most of the profit in. I've got 14 days out to the January 17th and 49 days out to the February. So I'll keep an eye on this one, but the levels are quite a bit lower. So Microsoft would have to have a terrible Q1 for these trades to have any risk of assignment. I'd still be willing to own the shares though. Netflix, I'd like to see a bar count get hit. So a high bar count on this one on the 200 moving average. I don't necessarily want to short it right now. If we came back up to retest the highs, I may look at a short position on Netflix. May. I also closed out profit on MA and Visa. That's MasterCard and Visa. I took those trades. They were bear put spreads for $1.95. I closed one of them for $3.10, and I closed one of them for $3.75. Again, max profit would have been $5. I didn't want to wait the extra 2 weeks for the trade. I'm just taking the profit now just in case the market wants to, rally, I guess, and I didn't want to have those positions threatened. So if you took the trades with me on MA and V, those are profitable. I posted that yesterday. Okay, but Netflix, if we pull back to the highs, I'd like to fade that move. Otherwise, I'll just wait. I'll see if Netflix can, fall, and that's not awesome. Like, that's going to feel like garbage. But if we come back and fill this gap or find some dynamic support, I'm way more interested in, income trades down here on Netflix, being willing to own the shares way, way, way cheaper. But I just can't justify, other than having like a fractional ownership type thing. Like, if I want to control options, then I'm doing income trades down here. Otherwise, I'm just like, yeah, sure, just, buy, 100 shares, or I'm sorry, buy $100, buy $500, buy $1,000, whatever you want. Netflix at some point is, it's the king of streaming. It keeps getting better. The subscribers keep growing. The revenue is pretty solid. I think it's overextended. I think we need to have a pullback. We got a crazy high bar count. But I want to see if this falls back into a level that's more attractive. So I'll wait. NVIDIA. Yeah, I mean, NVIDIA is NVIDIA. Are we getting a run back to the highs again? Maybe the market's all excited about something, right? Or is this a fake out to then fade? I still think the bar count's legit. It's going to get hit at some point. I think we're going to struggle to break these all-time highs without being a pop and fake. So if this comes back up here to test the high, I think that's something we could probably fade to take it back down to the bar count. Don't be surprised if NVIDIA is still range bound until this 200 moving average gets hit. Just saying. So the nice thing is I own shares. I put a collar trade on. I've got a 140 by 130. I own the shares at 134 and change. I'll make $5 or $6 a share, and I can flip this thing in a couple of weeks for $500 or $600 per account. Okay, I'm fine with that. Do I want to do more on NVIDIA? Yeah, maybe I'll do the exact same thing. If it gets called away at 140, I do the exact same thing. If I want to, maybe I can roll up my call and grab a little greedy profit out of it, or go by another week and grab. I mean, if we're up here to 153 and my call's at 140, maybe I can roll it out by 1 week and grab another $50 to $100. Add to the bottom line. So I'll debate on that. So NVIDIA, there's my 140 by 130. If I wanted to roll this call, I don't really want to roll it without rolling the put with it. But I have some options here, so I don't have to do anything. I can still make about $600 if I roll this. I mean, if I roll it out a week and I keep the same strike price, I get $1. I mean, that adds another buck to my bottom line. I just have to go out an extra week. So as I get a little bit closer to expiration, I'll debate on that, because I can maybe, like right there, I can roll it up $1 and still get 40 cents. I can roll it up. Yeah, I mean, if I rolled it up $1 and get that's $1.40 to my bottom line, that's another $140 a contract. So there's ways to increase the profit here, even though the price is like, oh, I should hold it all the way. Nah, I'm just doing a repair, but a repair for $500 or $1,000 a time it adds up nicely. So, all right. I feel like I talked a lot today. Any other questions? Happy Friday. Enjoy the rest of your day. I think I'm good. So we covered a lot. We're just getting started. Next week, full week of trading minus Thursday with the Jimmy Carter Memorial. So market's going to be closed, but we have non-farm payroll next week. Let's take a quick peek at the calendar, and then I'll let you go for today. Let's go high impact only and medium impact. So next week, we have some services PMI out of the U.S. on Tuesday morning. We have JOLTS job openings, ADP non-farm, FOMC meeting minutes. Thursday, it shows that the news is still coming out. I don't know if the equities markets are going to, the equities market should be closed, but Forex will still be open, crypto will be open. And then Friday is the US and CAD job numbers. So the forecast is 154, unemployment at 4.2, average earnings at 0.3%. So are we going to continue to see, all sorts of wacky job numbers and prints? Maybe. Also January 10th, aren't we going to see an inauguration next week? So does that officially start? So the Trump dictatorship 2.0 starts next week. So who knows, man? I don't know. This is going to be 2025 is going to be, it'll be a year, whatever it is. It's always interesting. It's always new. It's always a clean slate. It's always challenging. We'll figure it out. So, all right, everybody, have a good Friday. Have a great weekend. And I'll see you soon. Thanks, Nick. Thanks, team. See you soon. Bye.
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.